to macro point of view commodity news on Wednesday 25th October 2023. In today's show we'll focus on the current fundamental market information that might affect some commodity price in the near future. So don't waste time and let's go for some knowledge. We'll start with the wheat market, when we can observe that the price was inside the bar from the 29th September, and the difference is now that they try to move up but return into the inside bar area, and it's hardly to see rising this price again as some fundamentals change in against the price of the wheat, where we've got for the beginning rising number of another 2 million of whole grains in Russia. This is currently Vice Premier Abrachenko say that they will harvest 90 million of wheat, and it will be part from 140 million grains in total in Russia. And last week Putin forecast said something between 137 and 138, which is of course against rising the prices in the wheat. Also, last weekend Argentina received some rains that stopped the drought from continue, and it already raised the number of wheat from Argentina to over 40 million tons. Also, we've got some rains in Australia, which is also raised our forecast for wheat in Australia for about 2 million tons. And all that together might reduce the negative balance on the wheat market, on the global wheat market, from 9.5 million tons that was forecasted by USDA on the last World Markets and Trade Grains report from October 12th. It was 9.5 million deficit over there, and it might be reduced to around 5 million if no other forecast will change for the next couple of weeks. So it's together all the better. Also, it's better rains in Ukraine when there are searing winter wheat. So all that is against the price, the rising price of the wheat. So I think it might be some problem to rise even more. Of course, the rain inside Argentina and Australia and Ukraine is also in favor of corn, but this will be something different. So we did this for the wheat, so I don't expect this price to rise into 700 cents in the near time for the next 3 or 4 weeks, until some other major changes in the fundamental market in global wheat market will happen. And we've got the cocoa, which is also on very high levels, and this might be holded. Why? First, of course, we've got rains in Western Africa, it's Ghana, it's Cameroon, when we've got delaying harvesting coconuts. Not coconuts, cocoa seeds, sorry. And also there is a problem with the higher price, and it might push those prices to fall a bit. So we've got still high risk of problems with rotting cocoa and in Africa due to the weather, and we've got still problems that there is lower deliveries than last year into the export ports, and we've got the problems that Ivory Coast claim that they cannot sell cocoa on the current prices, and some of the producers who are buying cocoa is requesting to lower the prices. They lowered some bonuses that is added to the market price to the cocoa, and at the moment some companies claim they don't even have enough resources to contract some buyings for season 24-25, so above next level, and even the Ivory Coast is still expecting 20% lower production in the season 23-24. So all that is probably will keep the prices of cocoa on higher levels, and we might attack. I don't think there is currently possible to reach $4,000, but I don't expect that this price will fall for another into other way under 3,500 in the next 2-3 weeks. So more likely it will rise, yet I don't expect there will be huge fall if there will be some kind of lowering the prices on the cocoa market. The current high levels, a new high levels on this sugar market is showing us that the price is not reaching the top, and I think we might expect this year even reaching 30 cents for a pound of sugar. And whatever there is a record output of sugar expected for the season 24-25 in Brazil, there is still problems, because first of all, the current season will probably the wet weather in the current season in Brazil, in a central south Brazil, will force some harvesting to be postponed to another season. That's the first thing. The other thing is that still there is a problem with the physical export. The Brazil ports are crowded with the soybean, with corn, with sugar, with coffee, and all that cannot fit their limits. So it's more problem to export sugar. That's the one thing. And also we expect that India will be banning export of sugar for the season 23-24, and we don't have that decision yet. But what I'm kind of fear, that India not only will ban export, which is already in that high prices, but it will also say they are ready to import some sugar. They will change sides from exporters to importers of sugar in the season 23-24. And because next year they've got some election in India, so they will try to push CPI as low as possible. So it's highly possible that they will probably sell some government stocks of sugar for the season, and they will try to restock it before the election. So that's why I think they might go not only for export ban, but also into the opening import, as well as for the wheat, but that will be known probably not sooner than March. So this is the things I can see now here in the sugar market. So 30 cents in November, it's highly possible for the sugar market. The currently gold stopped after unsuccessful attack on $2,000 level. The price stopped, and as you can see, I've got here two Fibonacci levels. One is the big one. The big one is here, and it's, as you can see, it's from the bottom of September 22 and November 22 up to the heights of May 2023, and that's the yellow one. And I put another one, the blue one, the green blue, the light blue, whatever the color you call it, from the low level here on this 6th October up to the recent highs. And as you can see, 23.6% stopped, so there is no reduction. And the gold at the moment is running by the two things: US dollar, which is obvious, and we can expect there will be some GDP information tomorrow on Thursday 26th, and 27th October will be the most important readout. So it's PCE, which is the most validated inflation rate for Federal Reserve in United States. So if there will be lower than expected, so there is a rising chances that there will be no another hikes in rates in United States. So it will be fueling the gold, because no more hikes will bring closer the next level, the next steps, which is lowering the rates in the 2024. So the good PCI, the good GDP will probably push gold further. Also, we've got some information that Israel Prime Minister said that they set the date for the land invasion on a Palestinian Gaza area, and that will be also escalating the war Israel-Hamas. And it will be also fueling, because there is always risk some other Arabic countries will rejoin the fights. And of course, I'm not talking about the Syria or Lebanon, I'm talking about the Gulf, the Persian Gulf countries like Saudi Arabia. And because there might be a conflict of interest, because Saudi Arabia is in general allied to United States, and United States will support Israel, that will make a huge confusion and a huge unknown, and that is a great fuel for gold prices to rise. So if there will be escalation in the Middle East, and there will be good GDP and PCI levels, GDP rising, PCI lowering, that might make this week $2,000 on gold possible, or next week as well. So that's the gold, and at the end I will take a closer look for the Brent, which is also stopping, because the main news for the oil at the moment is how fast Venezuela can bring production back, because they starting negotiating with the President Maduro of Venezuela, started negotiation with his political enemies about the next year election, and United States is claiming to drop some sanctions on Venezuela. And before sanctions in 2015, Venezuela was able to produce over 3 million barrels per day. At the moment, the production is under 900,000 barrels, 0.9 million barrels, which means this Venezuela production, if can be boosted in the next couple months up to even 2 million barrels per day, will probably cover the whole volunteer cuts by Saudi Arabia and Russia, which is at the moment 1.3 million barrels. So it should be pushing the prices. So if Venezuela will continue negotiations and United States will lift sanctions, we might expecting that the market will start counting some Venezuela production and will keep a closer on those levels. Of course, escalating the war on the Middle East is also fuel for fuel prices, for oil prices. Yet I think the more will be about the production in Venezuela and how fast OPEC Plus will fit Venezuela into some cuts of the production. Probably not sooner than in 2025, yet it might be expected. So thank you very much for your attention. I hope you enjoy, I hope you will subscribe our channel and to follow us more, and we will continue to returning with the current news for you as often as possible. I hope you will get profit from all your trades, all your investments. See you next show. Don't forget about subscribe our channel and enjoy the evening.